What if you could turn every dollar you earn into an asset that works for you, generating passive income year after year? Most people are stuck in the cycle of working harder for money, but the real key to wealth isn't working harder, it's working smarter. By shifting from being a consumer of currency to an architect of systems, you can unlock the true power of long-term asset building. In today's video, I'm going to show you 6 powerful strategies for managing your money that will accelerate your journey to wealth. These strategies will help you not only grow your money, but build a solid foundation for long-term financial freedom. Ready to dive in? 1. Implement the 70-30 life cycle rule. Imagine this. Instead of tracking every little expense or focusing on short-term savings, you divide your income into 2 distinct buckets, one for your current needs and one for your future wealth building. This is the 70-30 life cycle rule. The strategy here is simple but powerful. 70% of your income should cover your current lifestyle, your rent, groceries, entertainment, and daily living expenses. This is what I call the flow bucket. The remaining 30% is the critical part. This portion is dedicated to long-term asset acquisition, which I call the foundation bucket. Now, within that 30%, you'll divide it into 2 sub-buckets, 20% for legacy assets and 10% for exponential assets. Legacy assets include investments that grow steadily over time, like real estate or index funds, which provide long-term stability and growth. On the other hand, exponential assets are more speculative but offer significant growth potential, like emerging technologies or AI-driven side ventures. By setting aside a portion of your income for these 2 categories, you create a balanced strategy for building wealth. Why does this work? Because you're thinking not just about how much you save, but how effectively you use your income to acquire assets that will compound over time. You can secure financial stability through legacy assets, while also positioning yourself for higher returns with exponential assets. This approach ensures your wealth isn't reliant on working harder. It's designed to grow with minimal effort and maximum results. 2. Practice asset-first spending. If I asked you where your money goes, would it be spent on things that appreciate or depreciate? The mistake most people make is using their salary to buy things. Wealthy individuals, on the other hand, use assets to fund their purchases. Here's the habit you need to adopt. Instead of using your paycheck to buy that luxury item you've been eyeing, let's say it's a new phone or fancy car, use your money to invest first. Let your investments generate the returns or dividends that will eventually pay for that item. Think about it. You invest the money first, and when the returns from that investment, dividends, interest, capital gains, are sufficient, you use that income to fund the purchase. You get the luxury item you want, but without touching your salary. This habit is powerful because it transforms consumption into investment. Over time, the item you bought becomes an accessory to your wealth, not a detractor. You're leveraging compounding growth to get what you want, all while keeping your assets intact. The more you follow this strategy, the more wealth you accumulate, and the fewer things you need to buy with your hard-earned salary. You keep the underlying asset that paid for the item forever. It's not just about buying things. It's about buying things with the income generated by your investments, which continues to compound over time. 3. Build a digital real estate portfolio. In the past, building wealth through real estate typically meant purchasing physical property. While this strategy remains solid, today's wealth-building opportunities extend far beyond just bricks and mortar. Digital real estate, which consists of online properties, is becoming an increasingly powerful way to build long-term assets with minimal overhead. Unlike physical real estate, digital assets offer the opportunity to generate consistent income without the burden of maintenance, property taxes, or tenant management. The strategy is straightforward. Use your 30% foundation fund to create or purchase digital assets, such as specialized software plugins for a niche market, automated niche newsletters that generate consistent subscriptions, or licensed datasets that can be sold to businesses or researchers. The beauty of digital assets lies in their simplicity and scalability. Once you've built or purchased these digital properties, they can continue to generate income 24/7 with very little additional effort. Unlike traditional real estate investments that require regular upkeep and attention. Optimize for tax alpha architecture. One of the biggest drains on wealth accumulation is taxes. If you're not managing your tax strategy effectively, you could be paying as much as 20 to 30% of your gains in taxes each year. But the good news is that you don't have to accept this. With a little strategy, you can significantly reduce your tax burden and accelerate your wealth-building journey. The key lies in optimizing your tax advantage accounts, and the most powerful of these are Roth IRAs and health savings accounts, HSAs. The habit here is simple. Maximize your HSA and Roth IRA contributions. These accounts are specifically designed to help you grow your wealth by minimizing the amount you pay in taxes. The HSA is particularly valuable due to its triple tax advantage. First, contributions are tax-deductible, meaning you lower your taxable income right off the bat. Second, any growth in the account is tax-free, allowing your investments to compound without the drag of annual taxes. Third, withdrawals for qualified health expenses are also tax-free, providing even more benefits as you withdraw funds for medical needs. By treating your HSA as a long-term investment vehicle rather than just a health account, you can make it work more efficiently for your overall wealth strategy. In the same way, Roth IRAs allow for tax-free growth and tax-free withdrawals in retirement, making them a powerful tool for building wealth over time. 5. Automate the wealth sweep. One of the most important aspects of building wealth is consistency. The issue with managing money manually is that it's easy to get distracted or succumb to impulse spending. But what if you could automate your wealth building without thinking about it? Here's the move. Set up a balance sweep in your banking system. At the end of each month, configure your checking account to automatically sweep any remaining balance above a certain threshold, say $2,000, into your brokerage or investment account. Why does this work? It works because it automates your savings. You no longer need to make a conscious decision to invest leftover funds. You've set up a system that does it for you. This ensures that the money you don't spend is put to work immediately, instead of sitting idle in your checking account. Over time, this automated system will accelerate your wealth-building process, turning accidental savings into productive assets. 6. Hedging human capital with skill assets. Your ability to earn income is your most valuable asset. The issue, however, is that skills can depreciate over time, especially in the age of automation and AI. So, how can you protect your earning power and ensure long-term growth? Here's the move. Reinvest 5% of your income into skill stacking, developing high-income skills that are in demand. Skills like AI orchestration, advanced data analysis, or digital marketing can significantly boost your income potential. Why does this work? Investing in yourself is often the highest ROI investment you can make. For instance, spending $3,000 on a certification could result in a $15,000 salary increase. That's a 500% return on investment in 1 year, much higher than any stock or bond can offer. By continuously upgrading your skills, you increase your earning potential and stay ahead of automation, ensuring long-term career growth. Why these strategies work? Each of these strategies works because they focus on building wealth systematically and intentionally. Rather than relying on one-off decisions or fleeting opportunities, you are creating a solid financial framework that consistently builds wealth over time. By focusing on assets first, you set up a path that grows your money without requiring more time or labor. These methods allow you to create long-term assets that provide steady returns, and they also ensure that your money works for you, instead of being consumed by daily spending. By automating savings, focusing on tax efficiency, and reinvesting in your skills, you're stacking the odds in your favor for long-term financial growth. So there you have it, 6 powerful strategies to manage your money and build long-term assets. Start implementing these habits today, and you'll be well on your way to achieving long-term financial success. Remember, wealth building isn't about getting rich overnight. It's about creating sustainable systems that work for you over time. If you found this video helpful, make sure to like, share, and subscribe for more actionable tips on wealth building. Thanks for watching, and I'll see you in the next video.